Thank you, Mike. Thanks for the introduction. Great to be here. And my name is Kirsty Hogg, and I am the creator of Why Buy Gold, which is a Facebook. I am a Gold Tribe member with a company called Unique, which is responsible for getting gold and silver into the hands of ordinary people all over the world. I'm also an affiliate for Anglo Far East Bullion Company, and delighted to be here with you tonight. I'd like to introduce you to Bill Murphy, who grew up in Glen Ridge, New Jersey, graduated from the School of Hotel Administration at Cornell University in 1968. And in football, in his senior year, he broke all the Ivy League single-year pass receiving records and then became a starting wide receiver for the Boston Patriots of the American Football League. And then he went on to work for various Wall Street brokerage firms and specializing in commodity futures. And from there, he became affiliated with introducing brokers and eventually started his own brokerage on Fifth Avenue in New York. Bill Murphy and Chris Powell are the founders of GATA, and since then, Bill has greatly contributed to the public awareness of gold and continues to do so on a daily basis with his commentary that he writes on lemetropolcafe.com. So with no further ado, I give you Bill Murphy.
Hello, everyone. Can you hear me? I'm not so good at this, so you'll have to bear with some of my presentation here, but as I get going. But anyway, I thank you all for coming. It's my pleasure to be here. A special thanks go out to Daryl Head and Mike Price for jointly setting this up and giving me the opportunity to speak to everybody. Now, I know from what I hear, there's a bunch of questions that you all, or some of you would like to ask me and so on. So rather than ramble too long, I'm going to try to give you the basics of what the Gold Antitrust Action Committee is all about, and most importantly, why I think it's such a big deal, and why it's the most important thing, to know about the gold market. So first of all, just some background of how this thing started out. I used to be a limit position trader in the futures market, so back in another life, so I know something about it. And before I started my website, I'd heard about this big hedge fund called Long-Term Capital Management, and that they were short 400 tons of gold. And then they blew up. And when they blew up, I had just started my website, and I said, well, they're going to have to cover this gold. And I saw at the time, I saw Goldman Sachs, Chase Bank, Morgan, these big banks, Deutsche Bank, all coming in when gold's around $300 an ounce and stopping it. And then I heard some other things from other traders, and I realized after about 3 or 4 weeks that this thing was rigged. There was no way that they were going to let the price go up and jeopardize their other positions. So I started doing a daily rant, and that's when Chris Powell, an editor of a daily newspaper, said, Bill, I'm tired of you complaining about it. If you're right, it's a violation of U.S. antitrust laws. Let's do something about it. So we formed GATA. And it's interesting to me because I saw in some of the earlier comments that Silver Future was talking about Jim Rickards, who was just a very impressive guy, extremely knowledgeable, was recently on King World News, but he actually is allowed to talk in the public domain on CNBC and places like that. And he was the senior counsel for Long-Term Capital Management. So I had correspondence from him years ago in which we had a big go back and forth about long-term capital management involved in this thing. And he seems to have claimed that we said they were manipulating the market. We said no, that they were just involved heavily short the gold market and facilitated the thing. And then we went back and forth, and he didn't want to get in any further, so we stopped it. But it's so much fun to see him be one of the most bullish people in the whole world about gold and silver, because he knows what GATA knows. And so we wish him well, and so on. But anyway, getting back to how this all started, way back when in the late 80s, Robert Rubin, who became Secretary of Treasury and ran Goldman Sachs, a brilliant man, obviously, realized that he could borrow gold from central banks at very cheap rates, 0.5%, 1%, and sell the gold in the marketplace and use these proceeds to run his operation. Now, I know this for a fact because one of our big supporters reported directly to him at Goldman Sachs, so it isn't hearsay. And when word got out, and interest rates back then were 8 or 10%, heck, you could borrow, money at rates of 1%, as long as gold stayed the same or went down. What a bonanza! It's like free money. So many other people began to do the same thing. Then when Robert Rubin became Treasury Secretary, some of you have heard his big thing was the strong dollar policy. You probably heard about that for years. Well, the essence of the strong dollar policy was to rig the gold market or suppress the price because there was a relationship between gold and interest rates, which was following as Treasury Secretary Lawrence Summers, who's now running Obama's campaign, wrote a paper about at Harvard called Gibson's Paradox and the Gold Standard of the relationship between these rates. Anyway, what happened was the U.S. government, trying to keep the price of gold down, interest rates down, and to keep the dollar stronger than it would be, help our financial markets, give confidence, began a program to suppress the gold price. And that's how it all started. And eventually all these central banks began getting involved in dumping gold to the bottom of the market. I mean, the Bank of England is the most famous one of all. Now, the good news in all of this is that people think that the central banks have 30,000 tons of gold left. They do not. We've had a number of studies, the people in our camp, they have less than 15,000 tons. And they've been using this gold to surreptitiously suppress the price and keeping it way below where it would have been. You've heard many people say, and it's not just a Gada camp, that if gold had kept price with inflation, it would be $2,300 an ounce. So we're talking double the price of where it is today. That's how much damage they've done to the market. However, the problem is they're running out of available central banks that stop selling. I think of it an army that their casualties have been so bad, and they're running out of ammunition that they have to retreat. And that retreat in this market is always going to higher ground. And geez, we've been up 10 years in a row, and it's because they have to go through what we call a managed retreat. All they can do is delay the price from going up so much per year to stop too much excitement and to prevent some of these bullion banks from blowing up. Now, as we know, God has stood alone, and some of which I know are on this broadcast. We know that the gold price has been manipulated, and we're talking about silver too, which we'll get into. And a lot of it's just public record from Bank of International Settlement Statements, Reserve Bank of Australia, Fed minutes. We could go on and on and on. The stuff we've collected for 10 years all hangs together. But what's key is our track record. We have been correct for 10 years in a row. Yet if you go to most in the mainstream gold world and look at what their tracker is and what they were saying, what gold was going to do and why, or these Wall Street firms, they've been neutral to bearish almost all the way up. And you think somebody out there outside of our world will say, geez, what do these guys know that Wall Street or the mainstream gold world doesn't know? And that's the exact same case today. But we put a lot of effort in on the smartest guys I've ever known in my life. We've had 3 international gold conferences, one in Durban, South Africa, 2001 May, Gold Rush 21, Dawson City, 2005, in August 2008, Washington, D.C. We've been to the Speaker of the House, we've been at President Bush's friends, we've had all kinds of contacts with people. A lot of you know Ron Paul, and recently he started talking about issues, and pretty much admitted publicly now that God is correct about what the central bank's doing. So we put a lot of hard work, effort in it, but again, it's not just to go into our shtick and what we do, but to give you the confidence that we know what we're talking about, been right for 10 years, and where the price was going. At Gold Rush 21, which was just a magical conference way up there in the Yukon, Andrei Bykov, an economic consultant to President Putin, came, said it was the finest conference he was ever at. I know we have a lot of silver folks here, and Hugo Salinas Price, the Mr. Silver of Mexico, maybe Mr. Silver in the world. He was there. He had this TV station, TBS Tech there, and so on. But at that conference, and I urge you to go to Gada.org, and if you haven't seen it yet, go at least to see the 2-minute video of Gold Rush 21. Stated that the price was $436 then, that the price was going to go to $3,000 to $5,000 to clear the market. And we've been going up ever since then. And as you know, we're only at 1240, 1250. We have a long way to go. But it's very exciting. And the key to all of this is that there's a huge supply-demand deficit. And that deficit, meaning the demand over the years over mine and scrap supply, has been met by this central bank selling, which is drying up. As I said, the European central banks have stopped selling. The IMF is the only major seller right now, but all their gold's being bought by Russia. They just don't have the gold to meet the supply-demand deficit. So what we think we're going to get into is a big physical problem, which we can get into later on, what has to do with allocated accounts and the fractional gold selling and all that kind of thing. But we're in an exciting time right now. The gold cartel, as we call them, which is the bullion banks that are involved in this gold price suppression scheme, along with like the Bank of England and of course the Fed and Treasury of the United States government. They're under some pretty big trouble right now, as I mentioned, because of this physical situation. And we believe we are now at a time when things could be explosive. Now, a lot of you are, as I said, interested in silver, and quite frankly, so have I been for a very long time, and it's a very special time here because while they still have access to some physical market gold and they can get it, we think they've hit the wall with silver. Why have they kept the price of silver down? Because you can't have gold exploding, gold under pressure and not it being low, and quite frankly, until the past month, the action has stunk up the place. It's been terrible. And every time that silver would look good or the buyers would come in, J.P. Morgan, who's the big short, would bomb the market. And we presented this, some of you may know about our CFTC hearing on March 25th, in which one of our supporters showed emails. They've been talking to the CFTC of how they've been manipulating the market ahead of time with their people, and in antitrust faction, they would coordinate, go after silver, and wipe out the specs over and over again. So we presented this to the CFTC. I know I've been one of their commissioners, Bart Chilton, is a friend. I've been down to see him. Believe it or not, he's the only one for it, but he hopes to have something out this month on what's going on. There is an investigation. It's progressing. But honestly, if it weren't for Bart Chilton, I don't think anything would happen. But the point is, we showed emails of what Morgan said in advance, and our fellow Andrew Maguire told the CFTC in advance exactly the day when Morgan was going to attack, and it happened. And we had these emails, we passed them out, and of course it was a big deal on the internet. And some of you know my testimony was the only one not shown on web TV. They said it was just a fluke. It was some fluke. And then again, some of you know Andrew Maguire, who gave us this a special paper to present to the CFTC, was almost killed, he and his wife, the next day, and they said that was a fluke too. He was hit by a car, helicopter chases. One wild story. But getting back to where we are now, it's so exciting because the silver the past month has been like a leopard with new spots or something. It's trading totally differently. It was just about a month ago, and silver was down about 1750, and it was a day when all the markets were getting hit. The base metals, oil, stock market, gold was down. Everything was the dollar was up. It was a bloodbath in a way, and silver closed 30 cents higher. And I thought it might have been J.P. Morgan covering. I said, well, I haven't seen a day like this in years and years and years. And since then, it's fed on itself. And at the time, and some of you that follow my stuff, we said, we think silver's in play. There's a squeeze coming. And from my sources, I know that big players have moved into buying the physical silver market. And we believe that this gold cartel and the silver price managers have hit the wall. And as some of you may know, the other day there were no deliveries in silver, which is important because if there's a lot of supply around, the shorts want to get rid of their supply at the beginning of a trading month in this time of September. And all of a sudden, there were just no deliveries. The spreads in the market are very tight. And again, my sources say that the Chinese and Arabs and some big traders that had not been in silver before have been moving in the past few weeks. If this is true, and we believe it is, and don't expect it Tuesday because I'll jinx it if I said that, and we've had a good run up here, as you know, the past couple days. Silver is just explosive, and there's no telling what it could do because we don't believe that J.P. Morgan and the rest of the gold cartel has the physical silver to back up their derivatives trading on the futures market and elsewhere. So we believe that we could have some serious problems there in the near future and be very exciting. I know some of you know Sprott Asset Management in Canada is a big Gada supporter. Eric is just jumping up and down and has been the past 2 weeks about silver. And as you all know, we closed just shy of $20 on Friday, and it went all on its own, and it couldn't be more exciting. So what we think's happening here is that the gold cartel is gradually falling apart. They can always win a battle here, but we're getting ready to some serious excitement for both gold and silver, and the prices go much higher because, you know, the reasons that you don't need me to tell you to own both precious metals are going off the charts. And you know, quantitative easing is here and blah, blah, blah. But the key to the market is to know what Gada knows, which you don't get from the, I'm sure a lot of fellows here know it cold, but you don't get from the mainstream gold world or Wall Street. And that is the forces that have been suppressing the price are retreating and about ready to get their head handed to them. And that's going to be the major reason is the physical markets going to overpower their ability to suppress the price. And it's a very exciting time, and it's a great time to be paying attention here because I call silver the mule. I mean, silver just does it. I traded in the past in the old days. It just goes, and when it goes, there's no market like silver when it's going to move to the upside. And it does it on its own. And it's sure enough, I've been talking about this for years, and sure enough, it's done it again the past week or two. It's just silver just standing out. So, again, I'm very happy to be here. I know you've got a lot of questions. There's a lot of so much else I can cover. You know, we're suing the Fed, things like this. But I want to get into your questions, and I'm sure you've got a lot of the Gada information as I answer the questions. So again, I want to thank everybody for being here. We got a lot of fun coming this fall, and let me see if I can be of any help to any of the people that are on board here.
Yeah, I'll ask a quick question to kind of get things started. I just bought a few ounces, well, 5 to be exact, of that silver bullion. It's a shot, the silver shot. And I just kind of wonder what your take was on that. I always, thought small weights would be the best for when the price explodes. So I just didn't know what your take was.
Okay, what is happening now, that a lot of the people selling gold and silver are selling much more volume in silver now than gold because of the price differences. While gold is still cheap from where it's going to go, a lot of people that don't realize what's going on think it's expensive, so they're jumping into silver. I'm no expert on which's going to have the best premiums. I mean, when this thing takes off, but I think my common sense tells me that the cheapest way to buy it, where every person's going to want to get involved. Right now, the public can't spell gold and silver. You all are smart. You've been up on it. You know what's happening. The average person in America doesn't own any, doesn't know much about it. If you go ask, a lot of you ask 50 of your friends how many own gold and silver, it's outside of this kind of a group, there's not many. So the easiest, cheapest way to buy it is probably going to get the best premiums because that's where the average person can get in there. And it's going to be like the internet craze was in 1999. I mean, it's going to be bananas, and we're not even close yet. So everyone's going to want to own it.
Okay, thank you there, Bill. The question I have, Bill, is about the industrial market. I've been looking at this thing for several years, and I focus a lot on the industry, on how much silver is being supplied to the industry. And I'd like your take on the industrial market. I myself believe that the corporations are sitting back and trying to decide when to hit the buy it now, and when that does happen, I would like for you to give us your take on what's going to happen.
Well, the question is going to be, let me put it this way. God has got very much into this fractional gold reserve banking with the LBMA. We have a fellow named Adrian Douglas who's been really tremendous on this. And we have a fella, as a well-known guy, who went to the LBMA and said, we believe that for every ounce of gold and silver they have sold it over and over again. And that's why this bullion bank has been so profitable, because nobody went to get their actual gold and silver. In other words, what I'm saying is that if they had, say, 10 ounces of gold, maybe they've sold it multiple times, anywhere from, 2 to 50 times, and they've been able, the same gold and silver, and they put it in what they call unallocated accounts, which means it's in a general pot. It's not under your name. And so it's allowed them to get all this money selling the same thing and investing it in their businesses. So it was like free money. And as long as people didn't ask for their gold, or gold didn't go up too much in any one year, it was a profitable business. So getting back to your question, first of all, this one fellow, who's a big-time guy, said, the guy said, about only 2% of the people asked for their gold or silver. He said, well, what happens if more ask for it? And the LBMA guy said, well, then we go into real price discovery, meaning, holy moly, what would then happen? And actually, we think now it's begun to happen. But regarding the industry, and I'm relating to that because will the physical silver be there? And that's a real question. I mean, I'm not an expert like some others. I think I am in gold, but in terms of the supply-demand stuff in silver, there are better guys than me out there. But I know, as you well do, that the applications for silver are growing quite a bit for industrial use. And I know that to be a fact, and I know that's likely to continue. So what I can bring to the party is if people are waiting to buy and they need it, they probably should secure it now. I can say this: there are new big buyers in this market, and that's the reason it's trading so well. And the key is they're going after the physical market now as well as the futures. In the past, the spec buyers would come in, but the physical market, say, wasn't as strong as the derivatives market, and then J.P. Morgan, when the specs got too long, could bomb the market and just rate it and force them out. Now what's happening is, because of the physical market being so strong, they have not been able to do that, at least as of Friday. So all I can say is I think we have an explosion coming, so that industrial users ought to price in their what they have now. And then the question is really supply, and that's when we get excited, because there's talk about what could happen if the COMEX declares force majeure, meaning they can't be delivered and so on. That's a whole different subject. But right now, what they need to do is at least price in their future needs.
Hello, this is Derek, and I'm looking. Well, I got a chart in front of me on my screen. I know you can't see it. We're talking about this price explosion, and throughout the last week or so, I've been connecting the dots mainly. And a long time ago, well, back in the 70s, silver was at $1.25, and it only took 2 years for it to pretty much gain 4 times its value from that level. And it had one heck of a consolidation through time before it had its ultimately huge spike up to the 50 area once again, 4 times the rate. And currently we're seeing these same consolidations both over the last few years, like 3 or 4 or 5, and again over the last few months. And working within the mathematical Fibonacci, one, it says it's looking like, hey, it needs to break it right now. And the second is the exponential gains really show moves like 32, 50, 78, 100. Those would be the next 4. And the one question that I have, other than if this relates to within the big spike, I've heard Webbot, another one's talking about how it's both gold and silver are going up huge. But as far as the shorts are concerned, I have really not found I'm really interested in knowing like how big of a level it would get to if, say, they had to cover even upwards to 1/2, 3/4 So I'll just leave it at that. Thank you.
Well, it's a lot to handle. The fun thing I can say is that a few weeks ago I had sandwiches with the Hunts, and we went over what happened to them and so on, and how interesting it is today that that here it's just a reverse situation of what they did, and yet the government does nothing, meaning they actually played by the rules, and as you probably know, the government changed the rules, and Bunker went bankrupt on the whole thing. So now you've got Morgan doing, by the way, which is much more short, I believe, than Bunker Hunt was long, and yet they let them play the same game. So maybe what goes around comes around here, and the government's going to get theirs. When it comes to price targets, I don't know, but technically, as you guys follow this, the weekly made a multi-decade high close. It's a massive base below where it closed, and technically you can see prices easily short-term to 30. And of course, who knows what could happen if what God is talking about in the physical situation, that people start asking their gold from the LBMA and so on. I mean, there's no telling what this can do. I mean, but to pick a number on it, your numbers are as good as anybody's, and I just know that this situation is explosive, and it's like, how do I explain it? Markets, when they did so many years because of the manipulation and because of Morgan, too much silver was sold at too cheap a price, and now it's not there. And that's what set up some market explosions. And that's what I see coming. That's what the market's telling us. That's what the technicals tell us.